Bam.
Hey guys, Funsho here from We Coach Crypto. Hope you're all doing well and have had a fantastic weekend and enjoying your week. I am joined today by a very special guest who is Nick Black. Nick, nice to have you here. How you doing, my friend?
Good. How's it going?
Yeah, not too bad. Enjoying the sunshine. We've finally got some in the UK. It's quite nice. I know you're used to it. I've seen a few of your posts out there walking along the beach, so you know you're used to that sunshine. I'm not getting enough of it, man. I need to pop over to your neck of the woods, I think. But no, that's cool.
Yeah.
But yeah, I'm really happy to have Nick on today because this guy's got a hell of a lot of knowledge. He's been in the game for a long time. He's got a fantastic show as well called Crypto and Coffee that Nick runs. You guys should go and check that out as well. I'm going to put some information about it in the description below. But the reason I wanted to get him on today is this guy knows a great deal about like AI and different projects in the crypto space to do with AI. I wanted to talk to him a bit about that today and also about NFTs because I remember, Nick, the top shots, you trying to get them, you waited for quite some time, my friend, but it's all good fun. But yeah, Nick's a great guy to follow as well. Again, I'm going to put some information in the description so you guys can go and check him out on Twitter. You should definitely follow him. He's a wealth of knowledge. But yeah, just wanted to briefly have a chat about the crypto markets because obviously we had that flash crash. I've heard lots of different information about this. I wanted to talk to you about it.
Do you want to know what really happened?
I would love to know. Please do tell.
So a lot of people thought it was something nefarious, trying to throw shade on the market so that people ignored El Salvador, which probably the biggest moment in the history of Bitcoin was yesterday, right? A country with their own currency leveraging the dollar, taking Bitcoin, internet nerd money that people like you and I like, and making it, you know, a currency that's utilizable for sovereign debts and it's not just like you can use it if you want. They're telling people you have to accept it.
Yeah.
This isn't a choice. You will accept Bitcoin as payment or repayment. So this is a big deal. And so a lot of people thought it was that. I think that's a little bit too clever. I don't think that's all that. I mean, in the long run, we don't forget what happened yesterday. It's still a big deal. I think this was all about the exact same thing as it's always about. You had people that got overextended. There was a lot of 20x leverage, extended Binance, Bybit, FTX, which is kind of a sketch exchange, but that's neither here nor there. But when you go through all of the places where you can get leverage, everybody was taking on too much leverage. They were getting too enthusiastic. Bitcoin had moved above 50K and everybody was like, woo, we can't lose. And remember, when you go long on these exchanges with leverage, you have to service the other side of the trade. So if people are statistically long, if more than 50% are long, they have to service the short side of the trade. And these servicing fees come at every 8 hours. And so if you had a rate of say 0.1, it's 0.1, so 10 basis points, but it's every 8 hours on your account. Bang, bang, bang. And what happens is the more positive, the more excited, the more bullish people get, the more that rate increases to the point where you can have people paying 5% of their account every 24 hours.
Yeah.
So it's the funding rate. And if you look, these things always come after the funding rate gets above about, 15 basis points. Starts closing in on 20, which is more than half a point a day. And it's the same thing as compounded interest, only it's the reverse. It's like compounded potential insolvency. And so 20x leverage, if you get a 5% move in Bitcoin, and remember on some of these exchanges, one trade can do that. One trade, especially on these less liquid exchanges, because even the most liquid of these exchanges, people that are trading with leverage, it's not institutions. It's not Paul Tudor Jones. It's not any of the list, Druckenmiller, go down the list of all the talking heads, Novogratz. It's a bunch of retail rubes that think they've figured something out that no one else has figured out. Usually you'll see the same typical things in their little information under their name. It'll be like binary options trader, crypto, all this kind of stuff. And you know that a year ago it said unemployed, right?
Yeah.
And it is what it is. Gambling is a part of markets too, and I understand that humans gamble. It is what it is. But when the gambling kicks in and the funding rate is high and people are overly bullish, and this is more specific to Bitcoin, but it will start to grow with Ethereum as Ethereum derivatives start to get built out. Then these things always whipsaw back, and it only takes one or two sales. And what happens is that information propagates to other exchanges, and then you have these gap down sales. And you also have a lot of people that have trailing stop losses and stop loss orders, or they're trying to lock in some profit, and maybe they didn't even do it with leverage. Maybe they just have a trailing stop on an exchange. But when the price starts cascading downward, the first step is everybody that was leveraged with 20x leverage at about 4.99%, their entire portfolio is gone. Well, their leveraged portfolio is gone. They've been completely liquidated. If you have $100 and you have 20x leverage, well, if you have any amount of bucks, $1 million, $1 trillion, $1 gazillion bucks, and you have 20x leverage, a 5% move, you have zero. You've been completely liquidated. But you're not the only one, because what happens is it starts these gap down, these cascading liquidations. And so it's kind of like you have several groups of people that get slaughtered. The first group are the people that so you have the Germans that were opening the Ark in Indiana Jones. That's the leverage. That's the guys that were leveraged. They get their faces melted. Then it's the guys behind them. They don't even know what's going on. They're just like a henchman. I was like, I'm just here to guard the general that just got melted. Those are the guys with stop losses. They get melted. You have a bunch of people then over the next few days that had margin positions, like they were on the edge at Nexo, on the edge at Celsius. They had borrowed against their position, because why wouldn't you? They start to get melted, or they have to sell things like Nexo token or Celsius or any other liquid asset to fund their Bitcoin bet. And so those liquidations start to occur. And so when these events happen, there's the day of the event and everybody's like, and that's the first guys. And then there's the guys behind them, which are the marginally leveraged or the margin positions, and they get melted. And it's like, and it's just bang, 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 bang. And so these things take about 4 days to work their way out. But on the other side of it, it gets rid of bad behavior. And it also entices people that maybe felt like they got left behind, that maybe this makes sense to get back in. Also, these cycles are a lot quicker now.
Yeah.
So we might have seen the whole death and the pain that we saw in all of 2018. We probably saw it condensed into 2 months after May, June and July.
Yeah.
So the whole, and this gets into a deeper discussion, and you probably want to comment on this too, where people go, when's the bull market ending? When's the next bear market coming? This whole thing about looking for like there's these two forces that are grappling every night, calling each other like, Funsho, we're going to go bearish. Are you ready? This is not what's happening. And right. It's just not. This is an expanding market that's expanding in a way that humans can't grasp. It's logarithmic expansion. We don't think that way. And a good thought experiment is, if you take a piece of paper, like this big giant piece of paper, and you fold it, and then you fold it again, and you keep doubling it. After you folded it 53 times, guess how tall that would stack up? And it goes to the sun and back and to the sun again. If you stack it 103 times, it's taller than the known expanding universe from the Big Bang.
Wow.
103 folds. And that doesn't even make sense until you go, oh, wait, logarithmic, if you're doubling and doubling and doubling, it's the entire universe, right? And that's just one piece of paper, 103 folds. But we don't think that way because it wasn't important for us as we came down out of the trees and like formed these little cultures and tried to escape monsters and creatures that want to eat us and all this. It wasn't important to think in these kinds of terms. This is also, I guess we're going to talk later about AI. This is why so many people are not seeing the opportunity in AI, because this idea of misjudging logarithmic growth, it's keeping a lot of people to where they don't understand how powerful artificial general intelligence is going to be, and also how powerful it could be to your portfolio.
Definitely. I think you've just shared a wealth of information there. And obviously for a lot of the people that follow us, you know, they are at a beginner level and then going upwards. So there's one particular thing that you'd mentioned there that I think is key, just to rewind back on, that I'd like you to explain for me. And that's when you're talking about the basis points. So when we're talking about margin trading and you're talking about basis points and how they work, like, could you just simplify that to explain to the audience sort of what that means?
So basis points was just a way for people in finance to make 1% seem like a lot more. So if you think of 1% as $1, the pennies are basis points, right? And bond traders, it kind of evolved mostly from the bond traders, because bond traders are trading off tiny, tiny little fractions of percentage points, because a bond is measured, there's the price of the bond and then the yield on the bond, right? And those two things behave like this, right? And so, you know, don't think of crypto for a second. Let's just think of the bond market, like specifically government debt. I buy a government debt note. The bond has a price. This will be the price. And then this will be the yield. And so typically they trade, well, not typically, this is how they trade, right? If the price of a bond goes down, its yield tends to go up. And the other way, if the yield comes down, the price goes up. And sometimes the price is pulling the yield, and sometimes the market is pulling the yield. So when would you see these kind of mechanisms happen? And the reason for basis points is because these can be tiny, tiny little movements, right? Like the difference in the 10-year treasury, it might be 1.57%. And then tomorrow there's some chaos and it's 1.47, which you go, whoa, what's the difference over 30 years? Like, but to people that are trading these things like horses back and forth, those are 10 basis points, even though it's 0.1, right? So 0.1. So just think of every percentage point as a dollar or a pound, or however you want to describe it. Every percentage point is 100 basis points. So when you hear a 50 basis point move, you're like, whoa, that's a lot. No, it's 0.5%.
Yeah.
But it could be a lot to somebody that's got a lot of leverage and it's buying $100 million worth of government debt.
Yeah.
Then a 50 basis point move is your career. Maybe not good, or it might make your career, right?
Yeah, of course. But I think I wanted to make sure that I was highlighted. And the other thing as well is, you know, there's so many of these different margin trading options, and 25x, 50x, 100x, 125x. And the higher you're going on that leverage, it's just a tiny little amount that the market moves, and that's it. You're wiped out. I mean, just to ask an outright question, I mean, do you margin trade, Nick?
No.
There you go.
Margin trading is in many markets, it might make sense. So if I was an equities trader, I think that if you do a lot of research and you really believe in something, I'm not one of these people that says leverage is the devil, leverage is evil. I don't think it's necessary in crypto, because the digital asset space already has a lot of cooked in potential. It's an atomic bomb that's expanding. Why on earth you would want to get in front of that and try to think that you could possibly outsmart everyone else on the planet? That's the smartest people on the effing planet are here in crypto, because they know this is where the opportunity is. But also the dumbest people in the planet are here in crypto, right? Because it looks like easy money. And you have a mixture of the smartest people and the dumbest people. Who do you think wins that?
Yeah, it's a no-brainer, isn't it?
It's a no-brainer. And so when you extend leverage in a market like this that's incredibly volatile, I think that people go, ooh, I can buy 20 times as much. So Bitcoin goes up 1,000, I make 20,000. That is true if everything behaved in a straight line. And if you look from 10,000 feet and you look at the last 12 years, it has gone straight up and to the right. But when you get really close, it looks like a meth addict's EKG. It's not right. you would go, oh my God, how on earth could you trade this with leverage? Well, you shouldn't. Now, if you're a real estate investor, everybody that owns a house took on leverage. You make a down payment of 20%. You took on 5x leverage. You just agreed that you're going to keep paying it. You're going to service that debt till you own the home. That's the difference. But if you extend that same leverage into a really volatile asset, like if your house went from being worth $500,000 to $2.5 million to $180 to $17 million to $35,000, you would go, holy S, I don't know when do I take a loan? When do I pay it off? Like, when do I sell it? It would be too impossible to imagine. Right now, we have houses, even though they're crazy and they're super expensive, and apparently no one needs to own stuff anymore because we don't own anything. That's a philosophical discussion, but that's a much easier market to wrap your head around. But that's leverage. When you take a business loan, you're building a business. That's leverage. But the difference there is, what you're going to, you have an idea of what to expect. And you generally, like a business owner, right? You would say, okay, I know this business. I know I can make profit, or I believe I can, given the landscape. And so this is smart money. Rather, I'm going to take a little bit of a loan from the bank, and I'm going to use that to extend my thesis to a market that I understand hopefully better than anyone else. If I get it wrong, I'm bankrupt. Right? Makes sense. In the crypto space, people don't factor in that you need to know about the assets. Most of the people that take on stupid leverage, they don't have the knowledge. So technically they are stupid. Now they might be intellectually, well, I kind of roll that back too, because if you had intellectual prowess, you wouldn't take stupid leverage in the first place, because you'd realize what a gift you have in crypto, and you wouldn't, light it on fire. Right. And it's like you put a bunch of snakes in your yard and you just say, only bite the neighbor's kids.
Yeah.
Okay. Good luck with that. Let's see how that works out. And so leverage can bite you, and it bites you. Leverage can snap back. So in a space that is this big, exploding, moving, growing space, you don't need leverage. You already have it. Look at some of these assets. I'm looking at Near.
It's killed it today.
It's up 70% today.
It's insane.
Why on God's green earth would you want to take leverage when there is already so much potential energy in this market? You don't need leverage. All you have to do is effing show up. Matter of fact, there's two things you do. Know what you own and just show up. Get off of zero, right?
Yeah.
Be able to explain, like you should be able to have a conversation with Funsho and say, this is what Bitcoin is. This is why I own it. This is what Ethereum is. This is what Cardano is. This is what Near is. If you can't do that, get it out of your portfolio, because you're gambling. If you don't know what you have, you're gambling. And that's fine if you're a gambler. But again, we already talked about the stupid market versus the rational kind of veteran market. And being a veteran also doesn't mean that you've been in the space a long time. It doesn't mean that you're rich. It means that you're willing to do the research so that you own assets you understand. That's veteran behavior, right? Position limits, balance, taking profit on a regular basis. Those are all veteran moves. There's not like you have to be a sour old grape like Warren Buffett to be a veteran. There's a lot of people that are veterans with 6 months experience because they behave as such. And so that's one of the things I like about what you do, Funsho, is you basically coach these people up to a level where they can have veteran behavior. So especially for your newer kind of viewers, you don't have to have, like, I've been in the space since 2014. My brother was a miner in 2010. He's a veteran, but I've 10x'd him. And he was making a Bitcoin a day. No, sorry. He was making 15 Bitcoin a day for a year and a half.
Wow.
But he didn't program his sales correctly.
Yeah.
So he was selling too soon. He wasn't holding. He wasn't magnifying his gains. And there's a lot of reasons behind that. But the point is, had he had a little bit of veteran intellect, then he could have behaved more rationally, and he could have had he only has 3 houses. He could have 10 houses. He only has 3.
Yeah, I get you. I love that. I love some of the things that you said there, Nick, because you know, that is all that's needed. It's like you said, it's just knowing what you're actually investing into, because this isn't a playground to come and gamble and just, you know, back any horse. You do need to know exactly what you're buying into. You know, if you've worked hard enough for your money, then, you know, work hard enough to know where you're going to put it to try and get further growth from it as well. Yeah. And it's key. And I love how you did. And honestly, you crack me up, Nick. I love some of your analogies, man. They're brilliant. But yeah, that's fantastic. And obviously as well, you know, that's where some of the smoke and mirrors comes in as well. Coming back to this flash crash, you know, you've given a fantastic explanation of what happened there, you know. But obviously as well, you've got everyone, you know, you've got obviously Coinbase was mentioned with the SEC. You got the futures. You've got the exchanges all freezing up. You've got the whales that are dumped, and you know, it was El Salvador Day, so people thought it would be the great time from a manipulative standpoint. So you know, having all of that so-called, you know, what would I call it? The news that is mainstream that people put out there as, yeah, this is why it happened. I just love getting quality information back to be able to share with people. You know, you've given a really good explanation as to why it's happened, and I think you've banged on the money. What I want to do is move on to AI, because I'm really interested to find out from your perspective, you know, why you think AI, number one, is a huge marketplace to be putting some research into and understanding with, you know, blockchain technology, cryptocurrency projects that are out there, and why this is likely to continue to grow, because I think that it's a huge part for the future in this space.
So it kind of goes back. So as a preface to kind of getting into understanding of these AI assets, I think it's important to take a step back and say, okay, let me understand what's kind of happening right now. What is AI? You know, everybody's like, oh, artificial intelligence, which isn't a great term actually. And so I started by going back and listening to Dr. Ben Gortzel. He's basically the godfather of all this. And he's, by the way, one of the co-CEOs of SingularityNET. He also wrote the white paper for Singularity DAO, which in 3 months went from 20 cents to $5 and whatever it is today, $5 and 10 cents. So no big deal, like a 25x, just like that. And so basically the idea behind artificial intelligence, our brain, just let's go to the meat sacks that we are. We have a brain, and it does a variety of different things. And you can just imagine, as some information comes into your eyeball and it's interpreted, and there's some kind of first kind of opaque interpretive action that occurs before it's pushed to other deeper parts of the brain, where you start to abstract, you know, and create ideas and make. So there's like different kinds of knowledge, but it starts with our kind of our earliest sensorium, when we're little kids, like bumping into shit and going, oh man, that's a solid object, I can't do that. And kind of figuring out like how to manipulate our bodies, right? Like the very simple. So we have all these things. So we have like sensory knowledge, right? And we have declarative knowledge. We have abstract knowledge. Like for instance, if you ask a little kid, you know, what's the difference between 3D and a 4D? You know, they're like, what? Right. Yeah. Like that's too deep a question to ask, you know, a 2-year-old. Okay. Right. But as they get older, they start to take on more general intelligence. And that's kind of, they start to add on. It's not just about the stuff they bump into, but they get old enough where their brain can start doing some more deeper level processing, where they can abstract things from things. They can see a car going at this speed and an old lady about to cross the street, and they go, oh, that's problematic, right?
Yeah, like deep learning kind of thing.
Yep. And so now they're using their movement knowledge, procedural knowledge, episodic knowledge, declarative, sensory, abstract knowledge, and they're becoming more generally intelligent. And so right now what we have in AI is we have systems of software and hardware mixed together, and they're trying to recreate in a variety of different ways this kind of soup, this general intelligence, and they're trying to milk it from data points all around that they could collect, and a mixture of interpreting data and, running very complex software and running, and being able to go and use the internet and use big corpuses of data to mine information that could be used. And so, and there's a bunch of different approaches towards this, what we're trying to achieve, which is artificial general intelligence. And maybe a better term is like a synthetic intelligence or true general intelligence, because, Ben had said, and he has some really great speeches, but kind of talks, but one of his talks, he said he didn't like the idea of the word artificial because that comes from the word artifice, which is a tool. And not all of these intelligences are tools, so to speak. So that's kind of a little bit too simple, but it caught on. But what we're seeing is artificial intelligence, and it could be something as simple as like with Facebook, you have text recognition and pattern recognition software. So when it's answering you, when the chat bot is answering you or whatever, it's not thinking, right? You don't ask it a question and it's reasoning using logic. It's going, these are the words he asked me. These words represent some meaning. They symbolize something. I'm going to go and look at all of this data I have where those words derived answers, and I'm going to find what's the most appropriate answer from a stick of text. So it's pattern recognition and text kind of induction type stuff, which is cool. Yeah. It's awesome, but it's not thinking. It's not going, interesting, Funsho. I like what you're saying. However, right, it's not think, because it's not generally intelligent. But this is along the path. And so in the same way that the crypto space is early and expanding, we're only 12 years in and we're just, right? I think a little nuclear bomb of profit is inside the AI space, because if we do the math and we have it's a marginally dystopian view, but the reality is robots are taking over humans' jobs, right? Yeah. When's the last time a human called you from a call center? I get robot calls all the time now, even if it's a robot that turns it over to a human.
Yeah.
So 1,000 calls go out and robots are managing those. And then maybe 1 or 2 of those click through and now it's a human. Sometimes it's not a human at all. Right. And so our experiences are starting to be that there's more and more robot or simple AI, let's call it narrow AI. Those interactions. Look at car facilities. You do have humans, but they're watching the robots.
Yeah.
Right? Soon it'll be a robot watching the robots. Soon it'll be a robot replacement software watching the robots. Soon it'll be a self-fixing, self-editing, self-programming, self-organizing, adaptive system robot managing the robots. And so,
crazy.
And so this is what's happening is, and then so I started going on a deep dive and saying, okay, man, I want to understand the nature of thinking, because if you think about thinking, you realize how incredibly valuable it will be to have systems that do this. Right. And so then that took me on this kind of journey towards like, what is life? And I say all this not to send everyone on some tangential, deep dive into the nexus of humanity, but you need to think about thinking. And because we're trying to make estimations of what the world looks like 2 to 3 years from now, so we can make good economic decisions. Because if you get this one wrong, you may be poor forever. And I'll qualify that kind of in a second, but AI is the last transition, I believe, that humans will make before we break off, where you have these semi-generally intelligent entities that manage everything, and we are less important. And that happens day one of something that's generally intelligent. And so to unpack what that timeline would look like, you have to kind of unpack, like go back to zero. And so you say, okay, what is life? Like, how would we get a definition of life? Because if we're going to qualify what is general intelligence, what are these entities going to be that take our jobs, that do things that we think are creative? They will do them. And so we say, well, okay, well, where does it start? So There's a couple of different definitions of life. You can kind of choose what makes the most sense to you. It could be a self-reproducing chemical system capable of Darwinian evolution, right? It could be a system that patterns particular structures into matter. If you're like a software engineer or something like that, you might like, those kind of definitions. But we've all got to grapple with what exactly does it mean to be living? Then we have to say, okay, now a continuity of consciousness, right? So, well, how could someone go from being a living entity and go into being a mechanical entity without losing continuity of consciousness? Well, when there's brain injuries, they will replace the brain with certain chips. I know they're doing some kind of interesting things with the olfactory nerves, where people that are blind, even blind from birth, they have these chips, and I'm simplifying it obviously, but they have these chips and bits of software that will send directly to the occipital nerve what the representation of those images would have been as they're interpreted into the eye, even if they don't have eyes, which will let people see, because it's essentially getting the same nerve information as the eye, as it was interpreting information that would have come into the cortex. So long story short, the things that you're seeing, they can be loosely turned into code and pushed onto deeper into the brain, and it's the same difference, whether you get the message here or you get the message deeper. And so there's all sorts of these kind of really cool things they're doing in neuroscience.
Yeah, that's amazing.
So you could imagine a scenario where, this part of the brain is either messed up or is inefficient. We're going to take it and we're going to put a chip. And we're going to take it and put another chip. Well, what happens when you get to 49% chip and 51% human, and then you put 1 more percent chip? Now you're 50-50, 2 more percent chip. What happens when you're 99% chips and 1% meat brain?
Yeah, that's a good point.
But you've had a continuity of consciousness. You've never gone unconscious. You're awake. You might feel some upgrade difference, but right, like you've upgraded, but you haven't. You've had a continuity of consciousness. It wasn't an off and on. It was on, and then they replaced that last piece. Are you no longer human? Well, then that gets into a discussion of like, what is it to be human? That's kind of an abstract thing that we can't really grapple with. What is it to be human? Different things to everybody. But we could say, okay, well then, assuming this continuity of consciousness, you can imagine a scenario like I just laid out, where you go from being full meat sack creature, human with thumbs and stupid shit, and you transition into a completely kind of a robo sapien type
thing. Being. Yeah.
Yes. And you've had continuity consciousness. So then it becomes, well, we have to talk about intelligence, because simply the idea of what does it mean to be human that's too abstract, but we can define kind of intelligence, at least in a way that we can understand it to ourselves. And we can probably define, what would it mean? How do we ascribe intelligence to a thing? Because we're thinking about taking machines and software, partnering them together and creating intelligence beyond just pilfering a pile of data, looking at responses on Google and serving up another response. Oh, you usually go to porn websites. Therefore, you're probably, if you push the word P, it might be porn. If you push the word P and the O, you're definitely looking up porn. Therefore, we're going to serve you a bunch of porn websites, right? Like, you're like, how is it so smart? It's not smart. We're patterned creatures. So we have to look at, okay, what is intelligence then? So that's the next dive. You say, okay, a couple of ways of looking at it. One, achieving complex goals in complex environments, right? That would be one way of looking at intelligence, right? Maximizing an expected reward over time, right? Trying to maximize the payouts. That's kind of game theoretical, but that would be an intelligence. A complex, self-organizing, adaptive system. That adaptation that kind of starts to spark it, like evolutionary influences, adapting to an environment. But an intelligence is not simply through mutation. Darwinian evolution is a lot through mutation, accidents, fortunate accidents that occur over time, these long times. Intelligence is self-fixing, self-maintaining in real time. You're trying to learn behaviors that improve your outcomes. So it's that self-organizing and adapting in real time so that both the near term and the long-term future, you're in a better scenario than you were, right? So that's that's a description of intelligence. Optimizing computable reward functions over computable environments. That's just a fancier way of saying what we just said, right? Maximizing payouts, right? But if you look at an environment, you want to optimize the computable reward function over that computable environment, because things beyond your ability to compute, you can't, they're beyond the scope, right? Those become abstract things. But you start to say, oh, if you start to do this deep dive like I've done, then what happens is you go, okay, how do I reduce this? Because at the end of the day, we want to reduce it into an investment decision to make my life better. But this one is more dire than any other investment kind of thesis that I've had, at least, because the implications are that when a true or something approaching general intelligence comes into play, let's take Uber as a great example. Uber, well, the arguments about the business aside, Uber is the #1 employer in 32 American states. The #1 employer.
That's crazy.
So what happens when they bring in self-driving cars, autonomous vehicles?
People lose their jobs.
A lot in 32 states. The main employer fires everyone for self-driving cars. Then, of course, Uber will be fired because the car companies are going to look at that and say, why are we leveraging Uber? We'll just create our own autonomous fleets. Uber will go away.
True.
So then, because they'll disintermediate that. They're like, why do we need Uber? We have cars. We have satellites. There's no need for Uber.
Yeah. So, I think, like, just to touch on that quickly as well, it's so important to highlight that. And I've seen a lot of posts where people put it out where it's like, Uber replace taxis, but we need to think about what's going to replace Uber. When you get that right, investment opportunities start getting pretty tasty for people.
That's right, because then you're in early, unlike the internet boom, which is a bunch of fat, rich white guys, and we didn't get to participate. This is one where you can, this is the greatest thing about crypto. One of the great things is that if you do the research, you can participate as early or earlier than every fat, rich Mike Novogratz, every Druckenmiller, Paul Tudor Jones, go down the list of idiots.
Yeah.
Right. They can say whatever they want on CNBC and they can big dick it all they want. But the reality is this is one where you become a VC with $5.
Yeah.
You're a VC. Awesome. Enjoy. So, right. So it's like you're at the campfire. You're at the campfire and the bear comes. You don't have to outrun the bear. You just have to outrun the fat kid.
Yeah.
And by doing research, everybody around you that's not doing research, they become fatter and more bloated and slower and less likely to react and less likely to adapt and less likely to get rid of bad information and appropriately weigh good information, or just listen to the noise and be able to kind of like say, that's noise, I'm not going to pay attention to that. But, and we saw it all the time. Funsho. Remember on Clubhouse, there was like, Tether, man, it's going to crash the markets and all this kind of stuff. I'm like, that's noise, bro. You're just focusing on the wrong things. You're not weighing information correctly. And then that's rookie status, right? And then veteran status is finding a way to appropriately weight all this information. So when I reduce that back to, the Uber argument, humans will get disintermediated by robots. And I'm using robots as a loose proxy for AI merged with software. So when Uber gets rid of the humans, the robots will get rid of Uber. There will be no need. Why would you have a middleman sucking up currency units and value when you don't need it? It will cease to exist. Yeah. And so a lot of these things that we think are staples will cease. They will be disintermediated, but the first group to be disintermediated will be humans. And you say, wow, well, what's that going to look like? So then you start going, okay, like, humans, we behave on a system where we kind of look at a probability distribution of motivational systems, right? Like, can I do this thing? What's in it for me? Can I do that thing? How much joy or happiness would that, bring me? That's like, why do we want all these currency units? Well, it'll make us happy. Well, how does it make us happy? Well, money doesn't make you happy. Currency doesn't make you happy. iPhones and watches don't make you happy, but they might bring you moments of happiness by leading you to whatever your definition of happiness is, whether that's time with your family, whether that's, who knows, it doesn't matter, whatever. But whatever your version of happiness is, nothing in the physical world has any intrinsic real value other than its ability to get you closer to what your version of happiness is.
Yeah.
And so along that path, you say, okay, well, what does a world look like that starts to disintermediate humans? Where it's self-driving vehicles, where all of your like traders, these guys that follow squiggly lines, you're going to try to compete with robots? Are you retarded? You'll get gutted over. Well, you just won't exist. You will not be able to compete. That's like, I don't know if you played like Call of Duty, or in any of these games, and you're like, oh, the computer cheats. No, the computer doesn't cheat. It's just perfect.
Yeah.
And we're not. We're
better than you are. Exactly.
Yeah, we're these imperfect, emotional creatures that say stupid stuff at the wrong time and don't give someone flowers when we probably should. And we say hurtful things because we have egos and pride and all this. Imagine a system that has all of the knowledge that every single human has, that everything we've ever done in recorded history, every word we've ever spoken, everything we've done good or bad, and all of the data going as far back as is available in human history, right? They had all that at their disposal, unlimited or quasi unlimited memory capacity. They could crunch numbers 1 trillion times faster a second than you can in your entire life. And that's who you're competing with.
Yeah, you're going to lose.
Good luck, right?
You're going to lose.
You're going to lose.
And that world, how it's going to look as well, it's like, some of these movies, I refer back to this a lot with people, but some of these sci-fi movies that you watch, we're going towards that. We're, iRobot and Minority Report and all some of these other movies, like these days are coming, and you're either going to be, like you've said, you're going to be one of the people that's made the 1%, or you're going to be losing big time.
Well, remember when people were watching Star Trek in the 60s and they thought it was stupid? The idea of a flip phone, or just like a phone that you just talked it, like, what is this strange thing? Or the idea that you might communicate with your watch and tell it, and it did things. Oh, that's ridiculous. Paul Krugman, Nobel laureate Paul Krugman, who said that the internet will have about as much effect on humanity as the fax machine. And that dude won a Nobel Prize. You can be intelligent and stupid all at the same time.
Yeah.
And so as I went down this kind of path, I kept being led back to the same conclusion. And if we get AGI, artificial general intelligence, correct, then, and it's a kind, benevolent kind of AGI, the kind of thing I believe the people at SingularityNET will deliver, right? Yeah. The team that introduces that AGI to the world, it's going to be pretty important that who's on that team, because, the example of, in Australia, in New Zealand, they use AI research to look at the migration of animals. They look at menstrual cycles of cows. They look at, patterns of behavior in nature to increase the ability to farm, to create more abundance for farmers, and thereby passing off that abundance to people that consume, vegetables and milk and things like this. In the United States, a lot of that research the budgets are at DARPA and IARPA, which is Intelligence Advanced Research Projects and Defense Advanced, and they're looking at making better weapons to kill humanity. So which team would you rather create the first artificial intelligence that is ushered into society? The one that makes weapons of mass assassination, or the ones that track menstrual cycles in cows?
Yeah, I get it.
I'd probably pick the cows. And so I think the team is important. Exactly. And so that's helping me reduce my thinking to create an investment thesis. So my thesis is AGI, or something approaching AGI, is coming. So it's not like, will it come? It is coming. It's just a matter of time, right? And so when it gets here, I think the team that creates that's incredibly important. We want something that's infused with benevolence and hopefulness and hopefully tends to look at humanity not as a nuisance use of molecules, and like Ben says, a computronium or paper clips, right?
Yeah.
But then there's the other side of equation, and it's non-zero. Like you have to assign a certain amount of probability to the idea that it goes the other way, that an AI that's without emotion or an AGI that has no emotion and really just looks at everything mathematically may not look at humanity based on our history of being so great to each other. It may not look at humanity in a favorable way.
True.
And that harkens back to the thing called the Apple game. I think it was Google DeepMind that was doing this, but they ran this game called the Apple game. There's two little robots, two AIs. They each have a basket and a gun. And there's a field full of apples. The map has just tons of apples. And they basically have a rule like, go get as many apples as you can. Apples, the best thing you can do is collect the most apples possible. And so they go and they collect apples, collecting apples, until they realize that there's a finite amount of apples, scarcity.
Okay.
What do you think happens once they determine that there's a finite amount of apples?
Hopefully they start planting seeds.
They kill each other.
They kill each other.
Every time.
Okay.
They turn and attack each other. The first one that figures out that there's scarcity in these apples, they immediately turn on each other and take the other one out as quick as possible, because they realize, well, this is just, it's an environment without, no. Now, if you look at this from humans, you go, oh, that's awful. That's so mean. That's not altruistic. Well,
no,
maybe it is. They're protecting their tribe. It's a tribe of one. And it's simply survival at that point. Oh, there's only so many apples. I need apples to survive.
So you got to go.
You got to go. And it's every time. Every time they run these experiments, the result is the same. You realize when you don't pump any emotion into a system and it's intelligently behaving, and it's just looking at the mathematics of the situation. And game theoretically, that is correct. That's the right decision. Even though philosophically, from a moralistic perspective, we would go, So the point of that whole discussion is you have to kind of grapple with these issues and then reduce it to, okay, so the likelihood exists that when humanity kind of leaves the mechanism of doing things, right? If robots are doing most everything, they're doing the thinking, they're doing the economic incentivizing, the balancing of funds, they're managing world economies, managing machines, managing the production of abundance for us. If in fact that's the best case scenario, right? And they don't look at us as a waste.
Yeah.
Then I say, okay, I'm going to reduce that. So AI's coming. It's going to push us on the sideline. Well, what happens? Then you create a caste system, I think, where the people that have and the people, so instead of haves and have-nots, I believe it's haves and have-nothings. Yeah. And those two groups, they probably go so far away that they can't even see themselves anymore, because they're short of being, I mean, reality is being physically attractive and being selected by the upper class to get sucked into the upper class for nothing other than some kind of component of physical beauty or some kind of, you're a really intelligent, you're a very selectable mate, right? I mean, other than that, you're not making the jump. Yeah. You're going to be down in the trenches in some dystopian hellhole. Now, that's not a very pretty picture, but it's probably a more realistic picture than the Kumbaya picture where we all go and high five each other and dance and get drunk all day while robots do all the work. Because these creatures that we will unleash that will be 10 times smarter than us from the first second, and every millisecond after that, their intelligence will expand. Ideally, they will help us solve all of these other problems, like, the fact that we have to die before we choose to die.
Yeah.
right?
Cancer, things like
the
that.
plague, all of these, the plague of an unplanned death, right?
Yeah.
And so maybe you should have a choice when you go, right? Maybe you should have a choice, how much pain you feel. Maybe you should have an emotion dial where you could dial it down where, hey, listen, I'm driving. I don't need emotions flooding my system while I'm on the road. Oh, right. Robots will drive. Well, maybe I don't need emotions flooding my system while I climb a rock. Maybe I should just think about climbing the rock and I'll appreciate the emotion of the moment at the top of the hill. Right. So you may, and people say, well, I would never want to do that. Right. But you may want the ability to do that.
Yeah, true.
You may like Gortzel says, you may want the dial. Right.
Yeah.
So
I think what, just touching on that as well, most people would prefer to have the ability to do it than not have the ability to do it. That's how technology is advanced and everybody is caught on. Do you walk down the road and do people not have mobile phones today? Just having the ability to have it, even if they don't use it as often as others, it's a given, 100%.
It's like we can take disappearing dick pics. We don't have to, but we can use Snapchat. We can do it. We have the technology. It's brilliant.
It's true.
A lot of people, if given the choice to have, or at least have not the option, they would choose to have the option. You can do what you want with these choices, but you want the choice, right?
Yeah.
But we're still grappling with death and murder and suicide and all these kind of haunting diseases that a truly sufficient AGI or something approaching AGI would solve a few minutes into its creation, right? And so if we get to a kind, benevolent, loving, artificial general intelligence, or like a synthetic intelligence, or like a true AGI, then all of the other problems are solved. So this is more important than going to the Marianas Trench or showing up on Mars with a hammer or any of this other, well-intentioned, but of very little utility stuff, right?
Yeah.
So that to me has become what I think is the most important thing in humanity. Put a creature, an entity that can solve all of our problems into existence to solve all of our problems. So I believe that's where we're going at some point. So now I want to reduce all this to investments in the space, because when the fork in the road happens, I want to be on the cloud city side. So that's reduced my thinking to a few companies all the way down, and basically AGI, which is SingularityNET. It's a decentralized AI marketplace that's launching a bunch of companies underneath it. NewNet Singularity DAO just launched, Rejuve, which is life extension, and all of these things. True AGI is coming, which is OpenCog. It's the new build of OpenCog, which is based on or Hyperon, which is their reiteration of a open source kind of a cognitive engine. Something that it's and I don't want to get into the details because they won't mean anything, but it's a weighted labeled hypergraph that leverages other graphs to try to start to recreate what the brain does. And so it's really cool stuff. So
cool. Okay.
That's something. So that's True AGI. That's another one of the projects that's launching. And so you're starting to see that underneath the kind of flag of SingularityNet, which is AGIX is the token. And there's only 2 billion tokens, by the way, and all the tokens won't even be released for another 99 years. So it's a very
we like scarcity.
We love scarcity. We also love it because in order to get airdrops for all of these projects, you have to park your tokens and not move them. And people say, why would I do that? Well, you would do it because the very first airdrop they gave did a 25x in 90 days. So it would make sense to park your tokens, sit on your hands, and collect the free airdrops. Sell the ones you don't like, keep the ones you like. So for me, AGIX is not only a great project run by Ben Gortzel, Hansen from Hansen Robotics, and a bunch of these really smart people that are so smart, I do a disservice by even trying to parrot their ideas. But that's the team that I want to succeed. That's also financially a team that looks very capable. So I'm investing in AGIX. And,
Cool.
and again, I don't tell anybody to buy anything. You go do your research. I'm just throwing things out there that might send you on a path of discovery, and it might lead to something that you like. AGIX gives you exposure. Once people realize this, I don't understand why people haven't done the game theory yet. You go into AGIX. AGIX wants you to lock up the tokens to receive the airdrops. The airdrops do really well. Ergo, people will buy AGIX. They will lock it up for a suspended amount of time. If you lock up the tokens, then there's less tokens available. We already know it's a scarce asset. So if there's less tokens available and they're doing more and more transactions, what do you think happens to the price action, the value of the token? And I don't like reducing it to value, but let's be honest. People could probably give a crap less about what my definition of intelligence is. They want to know, can I make some money off this?
Of course. And it's a no-brainer.
It seems pretty obvious, man. But
yeah.
AGIX, while it's my best in breed, it's not the only project I like. Of course, some of the other projects I like are underneath AGIX, which is great. So then you have Fetch. Fetch is the other side. In my opinion, Fetch is out rippling Ripple because they're actually making partnerships that produce results. I know it's crazy, actually partnerships that utilize the tech. That's what Fetch is doing. Fetch AI, if you want to look it up, it's Fetch AI. Now,
is it FET, isn't it? The ticker.
FET is the token. Yep, it's available on a variety of places, but it's also available both on KuCoin, Gate. I think it's on, and it's also on Coinbase Pro.
Yeah.
So this is really cool, and so it's a lot of fun to kind of dig into these projects. Well, Fetch, in my opinion, Fetch is the other side where they're making a lot of very valuable, potentially high value partnerships. They're working with Bosch, they're working with BMW, Jaguar. They're going to be linking up vehicles, service stations, gas stations, other vehicles into this big giant organism that's communicating, where all of these pieces are agents in this system. And whether you want to go find parking or find gas or get your car serviced or send it out and have somebody rent it out or what, all of these different functions, these vehicles are going to all need to kind of think as a brain, just like, managing traffic. It sucks when you have a bunch of individuals, but if you have smooth flow, like liquid going through a pipe, you can put the maximum amount of vehicles in a minimum amount of space with the most efficiency.
Yeah.
And so when the laws of fluid dynamics are implied against, behavior of vehicles, traffic gets a lot smoother, which lowers stress levels, which gets more humans where they need to go, which gives you more time to be with your loved ones or hookers or whatever you like, right? So me, it's hookers. But the point is, it's so all of these frictions, many of them, they're trying to solve from an automotive perspective. Then you go to the other side where they're releasing these autonomous economic agents, which will do a variety of things, not just managing your funds, but kind of doing load rebalancing and just kind of managing value across all the kind of spaces in your life where there is value trade, arbitrage, and all sorts of other cool stuff. Well, that's in a sense what Singularity DAO is trying to do with these Dynasets. So they're coming about it from a different angle, but these DeFi products managed by AI. And so then you say, well, does Fetch have any real meaningful partnerships other than cars? Well, they are connected to Fireblocks. BNY Mellon helped Fireblocks raise $143 million. So Fireblocks is already tied in to some of the biggest bank in the world, right? They have 42 trillion. So they are already at the top, and Fetch is their AI resource. So you don't have to follow. This is not, it's not reading tea leaves. This isn't flipping cards at a psychic, right? It's very clear what the path is. So I believe they are also from a different direction. They would be kind of a similar best in breed. So my best in breed picks for AI right now are AGIX and Fetch. And the staking on both of them is good. The AGIX staking, the staking AGIX, the staking's not good, but then you get all these other tokens. Well, Fetch is doing the same thing. When you stake Fetch, in addition to getting Fetch, and of course, a lot of this changes on the 15th. It's going to get better when they roll out their native token. Right now, they're using an ERC20 token. On the 15th, they're going to swap over. They're going to have a native token. And if you have coins on an exchange, they'll sort that out for you. But
Nice.
you also get other tokens. I was early in Fetch. I got MetalX tokens. I got Atomics. I don't know if they're going to be any good. They kind of sound interesting. Who knows? Point is, I get exposure to those simply by being in Fetch. And I'm getting staking on Fetch right now is like 23%. Staking on Singularity DAO, they have two kinds of staking, bonded and unbonded. The bonded staking is 42%, 42. The unbonded staking is 21%. You can't get, short of running a drug cartel, you can't get those returns anywhere.
No, you can't. And that's after you've bought something that's got the potential to rise in value by itself for you anyway.
There could be 1,000x among these assets. There's likely 1,000x somewhere in the midst. And if so, you say, okay, cool. There's 2 or 3 or 4 quality assets. You could build a whole AI portfolio right now with Singularity DAO, SingularityNET, and Fetch. There's your whole portfolio. You'll get the rest through airdrops. And then you have this portfolio of 3 assets. If you put $100 on, I'm not saying $100 is the number, but just for the sake of experimenting with your brain box, I put 100, I put 100, I put 100. I'm having a VC kind of theory where something's bound to crack. And so, okay, if one of those does a 10x, I still made a 3x. Right?
Yeah.
If one of them, you see where this goes. And so that's how you get good as we approach the singularity, right? The point where the robots leave us, because you don't want to be the other side. I don't believe in crypto. I don't believe it's nerd money and all this kind of stuff. You don't want to be there because you're done for sure. Because even in America, Social Security runs out in 2034. Done, gone, finished. No longer exists. I don't know if people are paying attention. It's $100 trillion problem.
Yeah, it's not going away. It's only getting worse.
So you do have these there's a lot of big issues that central planners, bless their souls, they're going to have to face those. But we are going to get the ones that get punished. Because what do you think happens when the U.S. prints? Because that's actual printing. That's not like bank reserves, which are not real money. Yeah. This is real money because it's going into people's pockets, which will be used to buy goods, services, or extinguish debt. So what happens when $100 trillion appear? Do you think every other country is going to sit back and watch that? They're going to either going to have to print in kind at the same rate to keep things, somewhat homogenized.
Yeah.
Or they're going to have to do something drastic, some kind of cascading unwind in debt markets, or because you say, well. And that's another little problem that maybe we should just spend a few minutes talking about, because a lot of people don't really think about it. But, this whole idea of this dollar kind of sovereignty, because it all kind of ties in. But, basically countries hold dollars because for international trade, for currency reserves, and for dollar denominated debt service. The U.S. is the only one that doesn't have to, because they print the problems and everyone else has to be the recipient. And so, if you don't service the debt, or you choose to walk away from your debt, then you have to devalue your currency and to keep up with the rising value of the dollar and all these kind of things. It could lead to a big giant credit contraction or some kind of, in these non-US markets. It can lead to a bunch of chaos. Let's just say that. And everybody has to watch the US and go, oh, they're doing this. We got to do this. Oh, here they go. And so at a certain point, that could unwind. And that could be chaotic. And if you look at all of these, why do you think El Salvador did what they did? Part of it was press. But part of it was because they're looking at the U.S. and they're saying, these guys are going to have to print $130 trillion just to fix Social Security and pension funds they've already guaranteed people. At a minimum, $130 trillion check in the next 12 to 13 years. They have to write that check.
Yeah.
So maybe they're looking at that and they're saying, God, man, we can't compete with that. Because if they devalue through printing, we get devalued. It crushes our economy.
Yeah.
Well, at a certain point, that's going to unwind. World markets are going to kumbaya and they're going to say, no, enough is enough. Yeah. We just don't know. No one knows when that is, right? And all of these things actually make the dollar go up, because as these other countries have to buy dollars to maintain the reserves, have to buy dollars to service trade, have to buy dollars to service their debt, The dollar goes up, the dollar goes up, the dollar goes up, which makes it harder for the U.S. to export. So what does the U.S. want to do? Well, we got to export. We got to drop our currency back down so that we can export. Otherwise, we're just being an import-driven nation. So they try to, they'll try to drop the currency back, or you would think a sensible person would try to manage the currency. And what happens then? Then the other countries have to print at the same rate because they don't want to get devalued and they don't want to crush. But as they print, their currencies get devalued because now they're printing their currency into insolvency. So it's like a fourth Weimar Republic, just a real slow version.
Yeah, and it's just a vicious circle.
Ugh, it's so bad. It kind of never unwinds until it catastrophically unwinds.
Yeah, and that's when people that aren't sat in some assets that can protect them against devaluing fiat currencies like the dollar, pound, every other one that's in existence. If you're not in crypto, if you're not in perhaps precious metals and some other things, like,
see, I don't even
you might not be living in a world that's, something you're used to anymore. It's like, I don't think people understand the magnitude of what is coming, and it's just a matter of when, not if. It is coming, and it's scary.
I used to believe, okay, get into real estate. Well, go through the list. Equities, they kind of track, but they can go chaotic. And most of the equity movement is passive indexation. That's not a real, you're getting the wrong signals looking at the equity market going straight up, because it's a few equities that are moving the market and everything else is getting punished. But you're getting bad feedback. So you say, okay, well, what about gold? Gold doesn't track inflation. It really never has. So that's not going to cut it. And you say, okay, well, what about real estate? Well, real estate would make sense if you could put your real estate in your back pocket and go and take it with you. But real estate is not really liquid. You can't get out of real estate quickly. If you needed to, you couldn't. If the market turns south on you, you're at the whims of the market. Not only that, governments and municipalities, it's very likely that one of the last levers they have is property tax. So they'll just increase property taxes, increase munis, and they'll just say, well, listen, we got to service the government. We need better roads, more firefighters and all this. But they're really just jacking property taxes because there's nowhere else to turn. And when they've jacked property taxes and they've decimated housing markets and there's no more money there, well, so you get beat up owning real estate. Now, what I would say is if you live in markets where there's not a bad tax situation by the local government, which again could turn on a dime, right? It's just, you're always one election away from being punished. And then maybe they don't have a confiscatory scheme. Maybe you're in a market where they don't have certain kinds of, like, where they'll say rent control and all these kind of programs to help the renter and all this, which anytime you start meddling, you have these unintended consequences and you create this perverse environment where, landlords can't put a new air conditioning in your unit because you've been there 30 years. And since they can only raise 3% a year, the price, yet inflation is 7% a year, they're actually going negative 4%. They're losing equity in their property. And you call them a slumlord, but they're bankrupt. They can't service your property because they can't afford to. So these government programs can be problematic. And it's like you look at all the ways you can get beat up. Like COVID, you have governors going, oh, don't pay rent. What? Yeah, don't pay rent. So, okay, are you going to tell the landlord that he doesn't have to pay his bank note on the property? No, you're not going to tell them that, because how dare someone own land and rent it out? Oh, they're so lazy. They're taking advantage of the common man, which is garbage. So there's all sorts of ways to philosophically make these stupid arguments. And the plebes, the people that are paying rent, are like, yeah, landlords do suck, man. So, right, like it is what it is. It's like the guy that takes his credit card and cashes it out, and he's mad at the credit card company. Don't send me letters. Bro, you just took $40,000 in cash. F you. Give us our money back. We extended you credit. You don't think you have to pay back? And then that gets into like the Donald Trumps in the world. They're like, if you borrow enough money, it's no longer your problem, right? Like if you owe the bank $1 million, you're in trouble. If you owe the bank $1 billion, the bank's in trouble.
Yeah.
So, and so bad behavior scales disproportionately in favor of bad actors. And you're like, crap, man. And it turns out that as you go through all the lists of the ways that you can keep your value, other than some very rare situations, it's pretty much crypto is it. It's if there was anywhere else, I would be there doing that. There's just nowhere else to hide.
You're right. You're right.
There's nowhere else to hide.
It's crazy, man. Well, listen, I think I did want to talk to you about NFTs, and I wanted to talk to you about Solana as well. But I think if you're happy to come back on, we can do another one, because I can talk all day with you, Nick, but we're going to end up with like a 5-hour live 5-hour video otherwise. But I love you coming on, man. Always get so much amazing information. It's always a joy. But yeah, definitely next video, what we'll do, we'll talk about NFTs. We'll talk about some of the projects that have sort of exploded, and there's a lot of hype around them. I did want to mention Solana because obviously it's had quite a substantial push. But I really appreciate you sharing the information that you have done today. I know that our viewers are going to take a lot from it. Like I said at the beginning of the video, if any of you want to follow Nick, all of his information is going to be in the description below, so you can follow him on Twitter. Also, check him out on Crypto and Coffee, which is his show that he runs, which is great. Do you want to tell people about that a little bit, Nick?
It's just kind of a fun place for us to share information about the crypto space. I do a show that's actually a lot more professional for Money Map Press. So that's more kind of bureaucratic content, right?
Okay.
But on the and it's all crypto based. But then on the YouTube show, we have a little bit more fun. So you can see it like on YouTube, Twitter, Twitch, whatever kind of weird way you want to watch it. And we have a lot of fun, and I have a lot of cool guests. I have Jerry Hall comes on a lot, Jeff Snyder, Emil Kalinowski come on quite a bit, which anybody that understands macroeconomics loves Jeff Snyder. And so, and Emil, those guys are awesome. I'm having, I think next week or the week after, I'm having the team from Singularity DAO. So like the CEO and all these geniuses at Singularity DAO, which are launching AI managed these Dynasets, which is essentially like money managed directly by AI. It's pretty wicked. So they're going to come on and just kind of tell us like, what is it that you're doing exactly, and why should Joe Sixpack care? So these kinds of things, we get some really cool guests. It's a lot of fun.
Fantastic. Brilliant stuff. So anyone that has any questions about what Nick's been speaking about today as well, or has any questions for us at We Coach Crypto, please leave them in the comments. We always get back to everyone, and we'll make sure that we forward those comments on to Nick if they're specific for him as well. Please like the video if you've taken some benefit from this video today, which is packed with so much useful information for all of you. You've been treated today. So please give us a like, share the video if you think someone will take advantage of it. And also, please make sure you hit that subscribe button and the notification bell to make sure that you are getting future videos. Nick, pleasure to have you on today. Looking forward to getting you on again, brother. Thank you very, very much. And I look forward to catching up with you all in the next one. Take care, guys.